Hey there, traders. Nick Shaheen here, recapping week ending July 25th for Benzinga. Visit me at Create Income with Options Spreads on MarketFi. Great company, great products. I'm one. You can reach me there. This is just a snapshot of it. You can also reach me via email, sellspreads@gmail.com, and definitely follow me on Twitter. I do contribute all the time. The MarketFi website has a messaging system that allows you to send me direct messages, and I do respond to each and every one of them. It's free. Use it. All right. Pretty eventful week, obviously. And what this is I wanted to recap the day, first of all, up here on the upper right-hand corner. Hopefully you can see that. The indices did not have a good day. I pay attention mostly to the during earnings season, especially to the Russell, because it's a big basket of stocks and cannot be easily swayed by a movement of one giant or one heavily weighted issue. For example, if Facebook or Apple or Google or Amazon, for that matter, has a good day, then it cannot move one index. In this instance, it's spread out over 2,000. So today the Russell had a bad day. We kind of had an idea that it could have, it was laid out, and it was down 1% or so. Whether you look at the RUT or the RWM, same with the SPY, but they were about half, and that's what I expect. When you have a bad day, I expect the Russell to lead down. When you have a good day, I expect them to lead up. And conversely, I also expect on a bad day to see the VIX, and it was to see the VIX up, which is the fear factor or fear gauge, I should say, or to me, it's a volatility gauge, and it was up 8% today. So, all in all, the market makeup was normal. On CNBC, you kept hearing them referring to the fact that it was, blaming it on Amazon or blaming it on Visa, which had a bad day. No, it was widespread, and it was just the heat map. I posted it earlier. Is widespread. It's red everywhere. Yes, it's redder here and here, but you don't see big green offset by the red. So the story is that it's widespread. Okay. So anyway, back to recapping the day. It was the pre-open was telling of down, and the last couple of days I've been expecting down, even though the markets were kind of. The way I recap it is, everything was going the Bulls' way earlier in the week, and the game was tied. So usually when that happens, in my opinion, if I'm playing a basketball game and everything's going my way and I can't put the other team away, chances are I'm going to lose that game. So we ended up on the loss. So recapping the whole week overall, the small caps were down. Let's look at the weekly here, and I'm going to switch to the RUT, which best represents the small cap. It's kind of a doji-ish right there, which means that it's market indecision. It is a red, so that's 3 weeks red in a row, breaking the uptrend, which I've noted last week. So not a very good story there, but it's still indecision, but it also bearish towards the end of the low rather than the high. So the story was a little better if you look at the SPX all by itself. It was green, but it's tapering. The trend line is no longer rocket shot up. It's tapering a little bit. It's a little better on the Nasdaq, I bet you, with all the earnings. Yep, sure enough, better candle, and it's still threatening on a breakout. So, but we had a few heavyweights report, most of which had good news, and we had a handful that were bad, obviously. But I expect, if I was recapping the week, I'd say overall it was bearish just because of the small caps being down so much. And sure enough, everybody's talking like the end of the world is coming in. CNBC is looking. We had one red day, and now they're looking for where is the weakness coming from. Well, the weakness has been here. Nothing has changed. The geopolitical headlines are just triggering an underlying situation that we've already had. We've had the situation did not change. The recovery is tepid at best. Yes, we as in the U.S. are getting a little better than the abroad. In Europe, we're getting a little faster, but overall, it's still the same situation. We're recovering, not as fast as we want to, and we're going to tighten rates sometime soon. Now that's the recap. Next week, more of the same, only volatility. So next week we have heavy economic data. We've got the Fed, we've got jobs. I'll pay attention mostly to the Fed because I'm really confused with Janet Yellen. What am I looking at? With Ben Bernanke, I knew I was looking at the 6.5 rate until he told me stop looking at it. I've canceled it. Unemployment rate. Now we're looking at the inflation. Fine. So we were watching inflation, and then when it ticked up under Yellen, she said, ignore inflation. How can I ignore it? It's everywhere. I pay gas. I don't remember when I paid under $4 in gas in California. Milk is almost double. Eggs is a lot more. And I'm told by one of my members that even though the can of beans didn't get more expensive, the amount of beans you're getting is smaller. So they raised price without letting you know. Same with the cereal boxes. So I didn't track that. I didn't verify it, but that's I've heard it from several places. So inflation is here. It's just whenever we are going to measure it and put it, and then Yellen will say, "Oh, I can't ignore that anymore. I'm going to tighten rates." So that's where we stand. I don't know. I need to listen to Yellen to see where is she going. What am I watching? I'm a little lost. And also jobs. If we print a 5 handle, somebody said on TV today on CNBC that a 5.9 unemployment, that the markets will run. I think it'll be the opposite. I think we're still psychologically tied to that 6.5, and the lower the number, the more likely Yellen is going to see that all is fine, since inflation is not quote unquote here, and unemployment is getting in the fives now. How can I keep rates so low so long? So anyway, that's my thought. So next week, it's a headline week. So what do? I trade specific names. I try to avoid the indices. Why is that? Because the indices are swayed and they're going to move in unison and on headlines. If I pick a good story, chances are, like a Google or an Apple or an Amazon or whatever story I want, chances are if my thesis is correct, it's going to hold up better than the whole index altogether. So that's what I'm going to do. Pick a good place, and this is the point in time where it's probably good to go ahead and review some of those names. And I'm going to jump around a little bit, so forgive me. One thing I was tracking on the SPX before I move on from that is this is the S&P, right? And I had this lime green dotted line here for members. I recapped it every day. I was updating how we're tracking inside of it, and then suddenly we broke down. And I said what was support, right here, support, right here, then broke, then became resistance, right? Butt up against it and failed, butt up against it and failed, but it's still upwards. That's still nice. And then big candle, remember that big candle right there? And negated the next day, but the trend broke down, and now we can't even get back up to that green line. So I'm watching that. And now I added another line, which was this one, the light brown, whatever that color is. I'm pretty bad with colors. Now it looks like it's some sort of a roof. Not roof to where I want to short the market right here. If I want to short it, I'll short it right here. Give myself some room. Leave room for plan B. So I do like the short side of things right now. I am more scared of a whoosh down than a leap up. That's the best way I can put it. The VIX is, you can't trade it. I just use it as a gauge. You can trade it. I can't trade it. I can't make any money off of it. I'd rather do it via the indices. I'll just use it as informational purposes. The RUT is in the range where it's okay. Down here, I don't like it because of this big candle right here. See, we went from here to here pretty quickly, so it's kind of mushy. So the way easy come, easy go, as they say. So there is no good level. As soon as we get here, the machines will start looking for somewhere to grab onto. They don't find it, so it's easy to get down to here, is what I'm saying. And back up there. So I'm okay playing down here and up here. Nothing close to the line. Double top scenario, perhaps. We'll see. Or cup and handle for like double or leap up. I'm not scared of that as much as the down whoosh. That's general terms. Apple, the hunt for 100 continues, and I keep saying the closer we get to 100, meaning the old 700, the less brave people are going to get, especially if the macro situation is going to be that way. Let's attack Visa. The two names in news today. They reported and the market spit in their face. They hated it. Look at that candle. The candle is doji-ish, so there is indecision, but there was a gap down. There's no indecision about that. They sold it hard, down at one point. I thought it was 4.5%. So what do I do with it now? Nothing. I sit back. This is a big gap. It demands respect. Yes, it bounced back from this big gap. But last time it did it right here, but there's something going on is that MasterCard is going to report next week, and today MasterCard moved down. I don't know where it ended up, and I believe MasterCard was down 2.5%, 2.6%, 2.5% almost. It was 2.6% at one point, and it's bouncing off of that. Why do I mix the two? Because they move in unison. It's kind of like a sympathy move. So if MasterCard moved 2.5% on a drop of Visa, what if MasterCard reports and it's also down? Will Visa move down with it? I don't know. I don't want to find out while I have a handful of Visa on board. So why don't I just wait until MasterCard report, and then I'll try to catch that falling knife. If I'm so eager to trade it, I'll buy some calls in it or some puts, whichever way I think it's going to go. The other bad boy was Amazon. So Amazon biggest gap down ever, or at least not ever. Anyway, there was a big head and shoulder that I saw a while back, and I noted it, and then it came down almost to the dollar. And I'm not a technician; I just play one on TV here, and on the web, I should say. So this is too big of a candle for me to try to catch it, and it's Amazon, for crying out loud. I love the company. I bought some yesterday. Bought some stuff off of it yesterday, not some Amazon. I did not play it because I usually play lottos for earnings, and the premiums were too expensive. Even though my bet was down and I posted it, I said down, but it's too expensive for me to participate, because then that would turn it into a decent sized trade, and it's just gambling. I don't put my family's money into gambling. So this was something I missed out on. Fine. I'll trade it when it settles down. I like to go long it. This is the ultimate growth company. I'll just wait until everybody hates it. Now everybody downgrades it. Where were they ahead of this? Why do they don't downgrade it before the fact? You know, that's too late now to downgrade it. Thanks a lot. If my broker tells me buy, and then they downgrade it after it reports like this and everybody hates it, so thanks. Now you add to my pain because your downgrades are causing the stock price to go even lower. So I don't understand that. So that aside, decent company, great management. I mean, they're gobbling up. As long as they're growing sales, I really don't care if they're profitable or not. That's what I look for. Take the name out, and you say somebody's growing 25%, 30%. Would you care how much money they're keeping in their pocket? No, they're growing. When they stop growing or they're slow growing noticeably, then you can start telling them, well, it's time to put some money in our pockets. Until then, I think people are looking at it wrong. I saw some notes about CRM finally moving today. That's just too what? I'm away from that. Tesla was green at some point. Last time I shorted it and made some money and walked away from it. I'll probably look at it, short it, but it's going to report soon, so I'll probably put a lot of position into report. It's a car company. I know it's going to end up being a good short sometime for somebody, but I'm not playing it big time right now. Lulu, I saw it green and then red. Priceline was interesting. Priceline was all over the map. The ultimate momentum stock moves $40, $50 in a day on no news, on somebody else's news. It's tightening. The range is tightening. You can see it going from here to here, and now it's here to here. So the range is tightening, which tells me there's a move coming. So it'll be a good lotto play for the earnings. And I may put some money into it because I know I can recover it after the fact. I'm going to do one. A good size lotto play, and I'll probably post it online. I don't want to say anything about it right now. So Priceline, I trade it. I avoid headlines, but I will do it via debit spreads or sheer debit puts or calls. Depends on the direction I decide on. I have not decided, so I'll keep you posted on that one. But for next week, pick names that you like to trade. Like if you're comfortable with a Google range, then play Google or Google L. This week I pinned Google at resistance at 600, and it failed at I think 599.75 was the was the high in the day I called it. So if you follow me and then you traded it, you should have made some money, because I recommended that we do some credit call spreads and some credit put spreads in it or something else, and there's money to be made. So if I pick Google and I do an iron condor in Google, if you don't know what that is, let me know. Then I have a better chance of surviving a whoosh down than if I just did credit put spreads in SPX or bought some puts or bought some calls or something, you know. So it's an easier unwind of a trade. It's self-hedged. I have some time to react. Obviously, a minus 10% across the market, nobody's going to survive anything unless you're 100% short. Caterpillar, I shorted it and I made some money and I got out of it and I did not touch it today. Today, it did some pretty funky stuff. For a while, it looked weak and then strong and then it gave it back up. See, weak and then strong and then gave it back up. So I don't understand what's going on there. So I'm going to step away from it a little bit. When I don't know what's going on, I step away. The only way I did it was via put spreads, and even then it was bigger than I usually like to. So I kind of I told everybody that I'm playing chicken, and that's not typical of me, but I won at least. That was lucky. What I didn't win on was Pandora. Pandora I did win. I shorted it yesterday, and I wanted it to come down to 54.5, which is about 12-13%, and it came down almost to the dollar. Why did I do that? Let me tell you why. I wrote a song about it. You want to hear it? Here it goes. This is because this candle yesterday was up 4 or 5%. So to me, that gave me a 4 or 5% leg up on the competition, meaning I knew I was going to guess negative on the earnings. So the 4 or 5% up before the earnings was an easy erase if it comes out negative. In other words, it was froth. And I bet with the market was betting down. I looked at the options market and it was an easier path down and up. I just took the path down, boom, won. What I didn't win was I was going to say is Zillow. You know, there was a headline that I missed yesterday that gave us this giant candle. It retraced and I bought some puts. Lotto size, willing to walk away, a few $100s. I won't cry about it. I gave myself some time. I took the August monthlies as opposed to weeklies. And then today, the candle complemented yesterday's. So yesterday's there was a wick up. So today just filled it. So now, interestingly enough, I drew these two orange. I'm going to go with orange. The channel, and look at that, it almost matches up perfectly to where it wants to go, so it may have a couple of dollars upside. I'm going to hang on to the puts and see what happens with the market next week. Maybe the whole market will drop it down. If not, I may be able to flip it to a credit put spread by selling the bottom and then, buying, you know what I mean, buying one leg and turning it into an aggressive bullish move. But it's a small trade. I don't want to turn a lotto into an investment. I'm willing to lose it and walk away from it. That's about it. CMG is just too violent for me to even talk about it. I'm not trading it. So just picking during the earnings season, I don't like to take full positions because they're gambling. Even if I have the P&L, I cannot guess how the market is going to react to the numbers. Look at Starbucks. That's another one I would usually go long on a downturn, but not yet. I think it's going to revisit. It has momentum to come down to here, and when it comes down to closer to this line right here, the bright red that I drew, then I'll decide to go long it. Okay, but for now, it still looks like it's got momentum downwards. So people are asking me, is it time to catch this? Is it time to catch that? Why be a hero? I'd rather miss a few bucks than to try to catch something coming down too early. So this is it. Nick Shaheen here with Create Income with Option Spreads. Again, visit me on MarketFi. If you haven't registered to receive my emails, I send them out daily. I send out daily maybe I could show you that. This morning I showed let's do this. Let me pull it up real quick. Sorry about the delay. Entertain yourselves here. Okay, so let me see if this was an email that went out this morning. Okay, and every morning I send out before the market opens to members an email, try to guide the trade for the day. So I said on the SPX, I said that the 1975 was still a high enough open interest that it may act as a magnet. Magnet misspelled, by the way. But I said, you've got resistance here, you got support there, and it came down to pretty much 1975, and then the same thing with a SPY. So what did this do? This helped people not chase should there be any strength anywhere. should the market open up, then it would help them not to chase. On the SPY, I said 198 still theoretically a magnet, so anything above 198 is going to be pulled down, right? So sure enough, we went in to the day higher than 198, obviously the close yesterday, and then but I said 197 should be support, so it loses the 198 like I thought it would, and then it bounces just above the 197, 33 tenths above. But I don't know exactly where we ended on the day, but regardless, so the information is out there, is available. So if you're interested in anything like that, sign up. You get these twice a day. Mail.com or through MarketFi. It's pretty cool. Anyway, almost on time. I promise next time I'll do better. Meanwhile, thank you very much for the attention. Nick Shaheen here. Talk to you later. Bye.